major relief to the startups, the government has decided to relax angel tax norms, increasing the investment limit to 25 crore rupees for availing income tax concessions, and also simplified the definition of startups.
India's startup community, which of late had been up in arms against the angel tax, now finally has reason to cheer, with the government putting out a notification which comprehensively ends these problems. They're even claiming that this goes much beyond solving just the angel tax issue.
The government has announced that now there will be a blanket exemption from angel tax for all government-recognized startups which raise an investment up to 25 crore rupees. After a series of complaints from the startup community facing crippling tax demands, the government has now made 3 concessions. All that startups will need to submit to the government is a self-attested investment declaration. The definition of a startup itself has been relaxed. A startup can now avail these benefits and exemptions for 10 years instead of the earlier 7. And an entity will be considered a startup until it crosses a turnover threshold of 100 crores, that is 4 times up from the 25 crore limit currently.
The sudden roadblock that had come up, causing great hardship and disappointment to the startup community, seems to be over now. Many names had been given to it, like the devil tax instead of the angel tax. The new norms should pave the way for genuine startups, investors and corporates, but at the same time it will maintain checks and balances for those who try and subvert the system.
What this notification leaves out is the fact that there are plenty of startups which have existing appeals and orders against them. For them, the CBDT says that there will be a mechanism where income tax officers, the assessing officers, will be briefed that there should be no recovery demands from the startups, and cases of appeals are disposed of within a specified timeline. Alisha Sachdev for NDTV.